Greetings to you all, Chatmaster here. Welcome to Chatmaster FX. Today we are going to look at the Quasimodo. The Quasimodo is one of the big 5 strategies at Chatmaster FX. And if you see a strategy or a standard operating procedure falling under the big 5, it shows that it's a setup with a high striking rate, and the Quasimodo is one of my favorite setup. So we are going to be looking at the Quasimodo. So we are going to look at some general information concerning the Quasimodo. So the QM concept comes from a cartoon character called the Quasimodo. So this character of this cartoon has got an application in the forex market, and the Quasimodo concept is applied by many institutional traders as they trade the behavior of the price. So we need to have a deeper understanding of the Quasimodo in order for us to be able to make good trades in the market. So basically we have 3 types of the Quasimodo. We have the general, we have the intermediate, and we have the advanced. At Chatmaster FX, we recommend that our mentees should use the advanced setup, since it has got a higher probability, it has got a high striking rate as compared to the other 2. So as we did our back testing, we realized that these 3 setups, they have a ratio of 1:2:3. So which means that if the general has got a 25% efficiency, it means that the intermediate has got 50% efficiency, and the advanced has got 75% efficiency. And I'm not saying these are the striking rates. I'm just giving you an example so that you can see that the advanced Quasimodo can help you to be more profitable as compared to using the general and the intermediate. But my advice to you is that you need to first have an understanding of the general, and once you master the general, you go to the intermediate. Once you master the intermediate, then you go to the advanced. So in this course, we are only going to be giving you some setups only for the sell setups. We are not going to give any example of some buying setups. Why? Just to shorten and for you just to have an appreciation of how the concept applies in the market. So it is my appeal to you that you need also to look for some buying setups in the market. So it's not like that the Quasimodo just applies to a sell setup. It also applies to a buy setup, but just for the sake of the course, we decided that we need to only look for a sell setup. So what you need to do is that you get familiar with the sell setup first. Once you are now able to spot the sell setups, then you can now be able to look at the buying setups. So now we are going to look at the anatomy of the Quasimodo. So basically, as we were saying, that we have the general Quasimodo. So on the general Quasimodo, you can see that the price is rallying here, and the price drops, and the price rallies. So you can see that this high was actually engulfed, and the price created a higher high. So once the price created a higher high, we see that there is a Quasimodo level that is formulated here. So once we see that the Quasimodo level is formulated here, Then what happens now is that we wait for the break of this lower low, which means this demand has been engulfed and the market actually was able to create a lower low. Once a lower low was created, then when the price returns to the QM level, then that's the place where you sell. Once you sell them, then your target profit will be the depth of the movement of the price when it engulfed the lower low. So this is the characteristic of the general Quasimodo. So basically, when you are trading the general Quasimodo, your stop loss should be above the high. So this is how you can be able to spot it. So once you understand the anatomy, then it becomes easier for you to go in the market and be able to identify such setups. So now we go to the intermediate Quasimodo. On the intermediate Quasimodo, you can see that the price rallied up. Once the price rallied up, it dropped. Once it dropped, we see that the price was able to engulf this high and it created a higher high. Once it created a higher high, you see that a Quasimodo level was actually created here. So now we have a Quasimodo and we have a low. So once we have a low here, we can see that this demand was engulfed. And take note that before the demand was engulfed, there was an MPL that was formulated here. So those who have watched the video of MPL, you understand what I am talking about. And this is MPL type 3. So once you see that an MPL has been created inside the Quasimodo, then you know that when the price returns to that level, then that's when you can be able to place a trade. So you can see, guys, that we had a low here, and this low was engulfed and it created a lower low. Once it created a lower low, you can see that when the price returned to the Quasimodo level, and now we have another confirmation, which is the MPL, then you can be able to place your trade. Take note that this intermediate Quasimodo is actually different from the general Quasimodo in the perception that the risk has been reduced. The risk has been reduced. If you look at the general Quasimodo here, you can see that the stop loss is actually above the high, which is at the high here. But now you can see that the stop loss is not on the high, but it is above the MPL. So I know that most of you will be having a smaller equity. So it's my advice to you that you can be able to use the Quasimodo, which is the intermediate version, so that you can be able to reduce your losses. So this is the general and the intermediate. So now, guys, we go to the advanced anatomy of the Quasimodo. So as you can look, guys, on this example, you can see that the price rallied and it created a high and it dropped. Once it dropped, it created a new higher high. So once we have a higher high here, you can see that a Quasimodo of type the MPL of type 3 was actually formulated here and the price dropped. Take note that this lower low, as it was engulfed here, you can see that the price actually made what we call an RS or an SR flip. So in this case, you can see that it was an SR flip, which mainly stands for support and resistance. So we had a support and resistance flipping. So you can see that the support here turned to resistance, and you can see here also we had another resistance. Once the price actually made this setup, you can see that as the price returned to the QMM, which is the Quasimodo immediate, or when the price returned to the MPL of type 3, then that's the zone that we can be able to place our trade, and we put our stop loss above the MPL. So you can see that as the price is approaching the Quasimodo level, there is a fake out that happened, and this usually happens to induce the breakout traders to think that the price is going up, and also to hunt for stop losses of the retail traders who put their stop losses just above the resistance line. So this is the advanced Quasimodo, guys. You are going to see it as we go and do some chart examples. So guys, these are the three anatomies of the Quasimodo. So now let's go to the chart examples. And before we go to the chart examples, maybe just to have a summary of what you need to look at when we are trading the Quasimodo. So there should be a breakout of market structure. There should be an MPO on the QM area, as we have alluded before. So now let's go straight to the chart examples. So here we can see example number 1. We are looking at Crash 500 index M15. So you can see, guys, that the price was rallying up, and you can see that we have a Quasimodo level here, and you can see that we have a lower low here. So what happened is that the price engulfed this low. Once the price engulfed this low, we can see that the price actually went down to this side, creating a lower low. So this low was engulfed. So once we see that the price is actually successfully engulfed this low, then you can see that as the price returns to the Quasimodo level, then we can be able to place our trade. So now as the price is approaching the Quasimodo level, there are some things that we have to look at. Now we can see that as the price was approaching the Quasimodo level, it was approaching it in the form of accumulation. Accumulation is one of the price approaching strategies, and we are going to learn about accumulation as we go forward with our course. So there was accumulation here, and you can see that there was a flippy where there was support, and you can see that the support turned to resistance. So we have a SR flip, and also we can see that we have a W Maru here on the MPL zone inside our Quasimodo, and a W Maru is also effective as the MPL. So we have the W Maru here, and you can see, guys, that when the price reached the Quasimodo level, it actually dropped. So here you can put your stop loss above the higher high. Why? Because it depends now with your risk management. As you can see that your entry is not that far from your stop loss, so it will be good for you to put your stop loss on the higher high so that you can give your trade a room to breathe. So guys, this is the example number 1 for the Crash 500. Example number 2, we look at Crash 500 index again on M15. So we can see, guys, here that we have a Quasimodo level. Here, once we have a Quasimodo level, you can see that this low was actually engulfed. So once the price engulfed, you can see that it created a lower low here. Once the price created a lower low here, you can see that as the price was approaching the QM level, it actually approached it in a accumulation, which is one of the price approaching that we are going to learn about. So once you see such a scenario happening, then you know that when the price reaches the Quasimodo level, then you can be able to enter a trade. So guys, if there is no PA, if there is no price approaching, then no go. If there is no price approaching, no go. I think you are understanding what I am trying to say. So you can see here that we had a double maru here on the place of the MPL, which is strong also as the MPL. And you can see that this double maru was able to hold the price, and the price dropped. You are going to see and be able to know more about the double maru. The module for that is going to come. So here you can see that we had a confluence of accumulation and SR flippy, where support tend to a resistance here. So that's example number 2. We go to example number 3. On example number 3, we can see here that we have a Quasimodo level, and you can see that this low was actually engulfed. Once this low was actually engulfed, the price was able to create a lower low. Once the price created a lower low, you can see that as the price was approaching the QM level, it actually approached the QM level in terms of accumulation. So we can see also the here that we had a resistance of 1, 2, 3 touches, and we can see that we had a fake out here, and we can see also that we had a support here which tended to resistance. So we have an SR flippy. So we have a confluence here. We have an SR flippy, we have a fake out, and also we have accumulation, which makes this a high probabilistic setup. So once you have a PA, then you can place a trade. I repeat, as I've alluded before, no PA, no go. As the price is approaching the QM level, the price should slow down, should give an indication that the price is going to react on that decision point. You have to understand that. So here you can put your stop loss on the higher high, since the risk is not that much, so that you can be able to give your trade a room to breathe. So we go to example number 4. On example number 4, you can see that we have a Quasimodo level here, and we can see that we had a low here, and we had an engulfment of this low, and the market actually created a lower low. Once the price created a lower low here, you can see that as the price was approaching the QM level, you can see that we had an SR flip here where support turned to resistance, and we can see that we have a resistance of 1, 2, 3, 4 touches, and you can see that the price made a fake out going to the QM level, which is our decision point. And you can see that on our MPL area here, you can see that there is a hidden base. A hidden base is one of the types of the double maru, and you are going to understand about it as we are going to look inside that module. So here we have a hidden base aligned with the QM level. Then you can place your trade here, and your safest take profit will be the depth of engulfment where you actually created a lower low. So then you put your stop loss above. So we go to example number 5. On example number 5 here, we can see that we have a Quasimodo level here, and you can see that we have a low, and you can see that the price was able to create a new higher high. So when the price created a new higher high, as the price was dropping down, you can see that this low was engulfed, but the engulfment was insignificant. Even if the engulfment is insignificant, we consider it as a valid engulfment. So we can see that once the engulfment has happened, as the price is approaching the QM level, we need to look at our PA, and you can see that as the price was approaching the QM level, it actually approached it in a 3 drive. We are going to learn about the 3 drive. It's one of the price approaching that you have to look at, and you can see that we had a SR flipping. You can see that the support turned into resistance. So here we have a SR flipping and a 3D confluence. So once you see a price approaching, that gives you an indication that that QM level is valid or not. Once you see that there is no PA, then there is no trade. You have to understand that, guys. So you are going to have a full understanding of the price approaching once we finish the module of price approaching. You'll be able to understand what I am talking about. So the surface take profit is the depth of engulfment of price. So guys, this is the Quasimodo. This is the Quasimodo, guys. You can see that from the anatomy and the chart examples, there are some quite differences that are there, but I know that with time we are going to catch up and be able to understand what I'm talking about. This is not rocket science, guys. This is something that is simple and you can be able to master it once you dedicate your time. So guys, I want you to wait for the price approaching videos so that you can be able to understand these things. So you must subscribe, and you can also like, so that you will not be able to miss our next videos that are coming. So thank you guys for listening to this presentation on the Quasimodo. Chartmaster here, signing out.